Welcome to a very special edition of Crypto Channel Direct. The news this week has been dominated by the general crypto market collapse, and it's affected many people. We're going to touch on some of the news stories surrounding this huge downturn, but also we're going to speak with Henrik Zeberg, who's a macroeconomist and digital strategist, to get a better perspective on what's going on. And I'll be speaking with Henrik about the bubble, economics around crypto, and the larger macroeconomic outcomes, as well as get his take on inflation and rate hikes. We'll then close on how this crash can be good for blockchain in the long run. I'm Claire Osbrown, and welcome to CCD, powered by Concordium. It's been a nightmare week for crypto holders. The past few days have seen the market lose a staggering $1 trillion as Bitcoin hit its lowest price share since December 2020. Ethereum, BNB, XRP, and many other digital coins have also fallen to their lowest levels in a long time. The crisis came after a stablecoin from Terra, designed to trade one-to-one with the US dollar, collapsed. Following this rapid market collapse, many are left wondering what the road to recovery looks like. But it's not just the crypto market that has been down. This is just a shining example of a general market downturn we're experiencing at the moment. US inflation has reached a 40-year high of near 8.5%, and this is forcing the Fed into rate hikes. Now, this is a global phenomenon, with the Bank of England warning Britain's economy could plunge into recession before the end of the year. The Bank of England has since raised interest rates from 0.75% to 1% to tackle spiralling inflation, made worse by Russia's war in Ukraine. Even in Australia, the Reserve Bank there raised the cash rate for the first time since November 2010 and is hinting at more pain to come to rein in strong consumer spending. Now, all of this pain in traditional markets and the stern action from central banks should be a great opportunity for Bitcoin to shine as a hedge against inflation. However, this narrative is proving to be a misnomer, as the founder and CEO of quantum economics, Matti Greenspan, said. Bitcoin's correlation with the S&P 500 has reached a new frustrating all-time high. Finally, China is one place where the market crash won't be felt too much, as the nation outlawed digital currencies some years back. But China has heavily promoted the power and potential of blockchain and has been steadily working on a countrywide blockchain ecosystem. BSN, as it's known, bills itself as a one-stop shop platform to deploy blockchain applications in a similar way to cloud computing. Paul Triolo, the technology policy lead at consulting firm Albright Stonebridge, told CNBC, blockchain technology in general is very important for China, as government officials see it as a low barrier to entry technology sector and want Chinese companies to push the envelope on using blockchain applications to solve real-world problems. Now, here to speak with us today is Henrik Zeberg, macroeconomist and digital strategist, where we will be digesting a lot of this news. So let's jump straight into it. Henrik, it's great to have you with us today.
Thank you. Thank you, Claire. Thank you for having me here.
So I'm going to jump right in, Henrik, and just ask you, you are a macroeconomist, and I want to find out what has led us to this recent crypto market crash.
Well, I think it has kind of been expected, because we're talking of an asset that is yielding zero. So in a world where rates are moving up, it is expected that we see yields like that not doing or performing really well. And I think that's really what we see. So we have had one of the strongest spikes in the financial conditions, and we have seen rates coming up with stronger than we have seen more than 40 years going 40 years back. So of course we're going to see yields which are of more speculative character performing badly. So, and also we've seen the dollar being quite strong. So the Dixie has moved up quite a lot over the last 2 months. And that is also a component of why we see the weakness in cryptos.
Yeah, but I mean, it's been huge. I mean, did anyone predict that this was going to happen, do you think?
Well, actually, I think there are a lot of people out there that do not believe in crypto, and especially with the people and the analysts that I follow. Well, we have to admit and to see that, to appreciate that there's been a market for crypto for some time, but we in a 5% interest world, where is crypto there? Yeah. And I think that what we're seeing now is exactly where the speculative cryptos are going to be in a world where the interest rate goes up. I'm not saying interest rates are going to go up straight from here, and I don't think cryptos are going to plummet all from here, but we are starting to see a race of, who are the ones that really have a technology behind them, which can be utilized for more than just a speculative element, which is the dollar is going to crash, hence we need to jump into something which is something that the Fed or the central banks can't touch.
Yeah, and what about gold? What is your standpoint on gold?
Well, gold, everybody has been saying that Bitcoin is like the digital gold, and it's interesting because if you look at the price development of gold compared to cryptos and to Bitcoin, it doesn't move like that. It doesn't follow the same kind of patterns or structures like that. So we actually see that gold can be moving down while cryptos can be moving up. And to me, that tells me that we're looking at a risk asset. So crypto is a risk asset, which means that you are expecting something of the future to come out from it. You know that gold is what it is. So we can make jewelries out of it, and we know that the central banks are keeping large, deposit or storages of gold, and they do that for various reasons. But to claim that Bitcoin is the new digital gold or is the digital gold is simply incorrect. And we have seen the kind of how weak or it's that cryptos become in the moment that we actually see the rate starting to move up and the dollar moving up. Even also when gold has been performing rather strongly, hasn't been crashing to nearly the same kind of degree that we see with cryptos.
Yeah. So Henrik, when we're talking about Bitcoin, why is it so heavily correlated to the stock market, in particular the Nasdaq?
Well, because it is a risk asset. So it is an asset where people expect somebody to come and buy it from you in the future. And when that doesn't happen, well, it will either fall in price, or if somebody determines to come buy it from you, it's something that can move up in price. The thing is that when we have had a world where the interest rates have been artificially low, and we at the same time have seen inflation move up, that's a world, or at least have some inflation which at a level higher than the interest rates. We have seen negative yielding rates or negative real rates. And this is a world where risk assets will do well, but the moment we start to see rates coming up, the real rate will be coming up, and that's where you do not want to hold assets which do not yield anything. So an asset like Bitcoin will be moving like some of the more speculative stocks in the Nasdaq, and you've seen that the Nasdaq and some of the US indices have been moving up much stronger than the rest of the world, which tells me that there is a bubble also in the stock market, and that's why we also see that both the crypto and Bitcoin and the stock market is moving up and down together. So it's not digital gold. It is a risk asset, and the future will tell us whether buying into some of these cryptos is actually something for the longer term.
Yeah. Henrik, when you're talking about the bubble, can you go a little bit more deeper into that? Because I'm thinking, what is the future of crypto?
Sure. So if we look at the stock market, we can easily call or tell it that's by fact that we have a bubble by the metrics that we normally use, and that is something that is also going to influence cryptos. So if it's true that what I'm claiming, that we have probably the largest bubble ever, surpassing what we saw in 1929, surpassing what we saw in 2007, well, then it's going to be hard on all risk assets, including what we have in the Nasdaq and including what we have in cryptos. So what will really be the future of crypto will be when the fog of war, or the fog of opportunities, as I would like to call it, around the technology which is underneath the cryptos, so the blockchain, when that really reveals itself. So if the real winners of this, and there will be winners coming out of this, just like what we saw during the 2000 bubble, real companies emerging from this, which will utilize the technology, the blockchain, in what really is the right use of it, which will make real value for companies and consumers around the world. So there may be a bright future for crypto, but maybe not so much for the crypto part, for the currency part, but for the blockchain part. That's what I see, at least.
Yeah, and that leads me nicely on to the blockchain, actually, because I wanted to talk to you about that, because I have been gathering you're not the biggest fan of crypto, but you actually do believe in blockchain, and for many, they see blockchain a little bit like the .com, or the internet, the huge revolutionary thing going on here. But tell me, what do you think about that? What do you think about blockchain?
Well, I think that's the emergence of a new technology, like what we've seen so many times before. So we've seen in the 1800s where we saw the railway coming out, the telegraph. We saw the cars coming out in the beginning of 19th century, and so on and so forth, and the internet. Yeah. And every time around that, we see that what I call the fog of opportunities, that a lot of investors flock into it, yeah, and say, okay, this is the new thing. We all want to get something out from this, and in that environment, and especially because we have this environment also created by the central banks, where we have a negative real rate. Well, that's a bubble environment. So that's where the real cryptos that have real value by the end of this, when this bubble bursts, and it will burst. Yeah. I'm not sure it bursts right now, actually, which I think a lot of people actually think it does, and I think there may be a new high coming to both the crypto market and also to the stock market. But when it bursts, it's going to be something which will be there for the history books, and will be something where the real companies that should emerge from this will need to stand up, yeah, and will need to be clear on what value is it that they are bringing to the market and why. Yeah. Because they will also be pulled down by the gravities of all the speculation that has been going on. And you have that every time. Every time we've seen a new technology emerge, like the railway in the 1860s, there were a lot of speculation around that, a lot of investing around that. We always say this time is different and this time is new. Well, really it isn't, because we are just human beings, and we are acting on the same kind of emotion and feelings. So I think that we're going to see fintech companies, blockchain companies emerge from this, which will create a lot of value to the market, and not to the market, to the economy and to the world. Yeah. And that's where the real value is. Yeah.
And it was interesting because you mentioned with human beings, and we are definitely governed by our emotions, and this has been a really emotional time for a lot of people. And sometimes, and I know that you're not an advisor, but however, you can come with your opinion. What do people do in this situation? What advice would you have for them in the crypto market right now?
Well, I think, most ordinary people should stay away from investing into cryptos. Because if you do not understand the technology behind it, if you do not understand the company, why invest into it? I mean, that's just a simple rule of investing. So really understand what the technology is behind, and so it requires a lot of at least analysis and understanding and deep diving into the kind of the opportunities of that particular company. But I've seen plenty of teenagers, the age of my son, who are starting to talk about why don't we invest in this? And it's not investment; it's pure speculation. Sure. And the more we have seen this many times before, as I said, also in the 1920s, we saw speculation arise because this time is new. We got the car, we got the refrigerator, and things coming out, and people simply wanted to get. Want to get the the benefits out of it, or earn the money simply. The greed is just coming out, and so if you are capable enough and that you need to look for the real value down beneath this, then I think there can be a lot of value found, a lot. But it requires a good understanding of the technology really down beneath it, and where it can be applied in real companies.
Yeah, and also I think completely agree in the understanding that it's an incredibly volatile market, and it's not something that should be looked at maybe short term, but very long term. And also, Henrik, I mean, I want to go back to the blockchain because you are an expert in macroeconomics. So I'm really curious about, what do you see the future of blockchain being?
Sure. So taking it a little, further out there, because we are in a situation where we have seen the long-term growth rate of the economy coming down since the 1960s, and this is a huge problem. It's a problem because it actually creates less jobs in the economy, and we then see that the central banks are starting to step in, trying to stimulate more growth out of the economy. And this is not really what the economy needs in order to get back to a high growth rate, long-term growth rate. It needs some technology leaps, and we've seen that plenty of times over the centuries, where technology emerges and we then leap into a new kind of growth trajectory. And this is where I think blockchain, together with other technologies like AI, machine learning, and the like, is going to take us to the next phase of development, evolution. We're going to see that new companies and new ways of doing business is going to arise. And I think blockchain is, in particular, is going to give us more credibility in working and trust between people. So we can actually trust that when we do business with somebody in Africa or somewhere else, that we actually do business with the right person, and that person actually is what he or she claims that he stands for. So I think that we are at a point where we can maybe leave the old internet behind and then step into a new, more trusted version of the internet, where we start to see businesses build new opportunities or utilize the opportunities within blockchain to actually create more business in areas we haven't seen too much before. And that is going to bring us onto a new growth trajectory. Sorry, yeah, but it's it's difficult.
Yeah. I think you're so right, Henrik, and I do think in the world that we live in today, we have such a great need for transparency and trust, and having this ID layer at what we have, the protocol level, is becoming more and more important for going forward.
Absolutely, absolutely, and I think that more transparency is needed in this world, not less. And if we take some of the thinking that you have amongst investors in cryptos, will probably claim that we need to move away from the government-run financial system. But I think this will actually lead us to a place where we see more transparency based on the technologies like what we see Concordium, for instance, is developing. Where we need to know who we are working with, across the world, and that will create more global trade.
Yeah. Absolutely. So I know this is always is kind of like the golden question, but how do you see the next few years? I'm not going to say 5 years, but the next few years, or certainly year ahead looking?
I think it's going to be very volatile. I think we're going to see, based on my macroeconomic outlook, I think we're going to see another crazy run up in cryptos. I think there may not be this, the same stack or the same. All of them that we've seen, before. Some of them have already lost, all credibility. But I think we're going to see that a next move up could be in the cards over the next coming months, and it has to do with the financial environment, where I think that we're going to see rates coming down quite strongly, and that will create kind of and also the dollar for some time, and that will create an environment where cryptos will do well. But that does not mean that cryptos are all fine and a sound investment. It means that we're going to see, another speculative move up higher, but when the bubble is going to collapse at some point, and it will, and I think we're going to see that in 22, and I'm actually going into 23. I think we're going to see that because we're going to get a recession at some point, and in a recession we're going to see liquidity getting drained from the market, just like what we saw this time around, and we're going to see the dollar getting even stronger. So at that point, it will be crucial for the real cryptos, the ones that want to stand up and show that we got the technology for the future, that they do so, and that the more speculative cryptos will absolutely get evaporated.
Super. Well, Henrik, it's been such a pleasure speaking with you. Thank you so much for your time today.
Thank you, Claire. It was a pleasure.
Thanks for joining us today on Crypto Channel Direct, powered by Concordium. I really hope you've enjoyed today's show. Henrik has given us some incredible insights into the broader picture on this most recent market collapse, and I can't thank him enough. And I know I say it a lot, but we really do love to get your comments and thoughts, so do like and subscribe by hitting the button below, and I'll be back soon and with all the news that you need to know. Until then, I'm Claire Ross Brown. See you next time.